Welcome to the Prudent Pulse. We're covering the week of April 22nd to the 26th. Now, for much of this year, we've talked about economic reflation and the Fed's need to push back interest rate cuts repeatedly. This is creating real challenges for economies and central banks around the world. Now, with the delay in cuts, the dollar reached its highest level since last November. And this has left other countries in a quandary. If they go against the US timeline and cut rates sooner, they risk weakening their currencies even further and potentially stoking inflation again. If they don't cut rates, they risk jeopardizing growth. Now, the IMF called out the US for its highly expansionary fiscal policy that is destabilizing the global economy and ultimately making inflation more difficult. The US budget deficit, which totaled 6.2% of GDP last year, is more than 2 times the 3% European Union maximum guideline. The IMF warned that the US fiscal stance is out of line with long-term fiscal sustainability, and it's inappropriate in an economy that remains overheated. Ultimately, this is likely going to apply more pressure on the Fed to be more gradual with its rate cuts. And that's this week's Prudent Pulse.